This next section, eligibility, which admittedly is more technical, however, we do make use of several colorful graphs to help make this section more visually interesting. The Covered California website requires an enrollee to understand and navigate several platforms for household and income status to determine eligibility. What is the federal poverty level, and how to understand the graph for those placing in 200% or 300% or up to the maximum 400% of federal poverty level? What is the definition of a household, and why is this important to eligibility? What is MAGI, Modified Adjustable Gross Income, and how is it used to determine eligibility? What are the various levels of program qualification based upon household and income status? Does this mean I or my family members must choose Medi-Cal if our MAGI is in that income range? I am married. My tax advisor has us filing separately. What does this mean for me and my spouse? This is a very interesting situation, which we will discuss in a moment. So here is the first test and graph, the federal poverty level graph. Can everyone see this correctly? Please focus on the various columns as a percentage of the 100% level, 200% and above, up to a maximum of 400% of the federal poverty level. Enrollees, based upon their income, either qualify for Medi-Cal at federal poverty level, subsidies at 200% to 400% of federal poverty level, or based upon income are not able to qualify for a subsidy. As you can see, there are various levels of income that qualify based upon the number of individuals in your household. Now on to our second test. How do we determine the number of individuals in your household? We find that regardless whether you have family members or friends living with you, you must contribute to their support and they must be shown on your taxes. These are examples of what a dependent might be when included on your tax return. For children, it can include your child, a stepchild, an adopted child, a foster child, brother, sister, niece, nephew, or grandchild, and in general qualify if they are a U.S. citizen or resident, live with you more than half of the year, are under age 19 at the end of the year, or 24 if a full-time student, and the child does not provide more than 50% of their own support. Other adults can be included if they are a relative, in-law, or full-time member of your household, and in general qualify if they are a U.S. citizen or resident. You must provide more than 50% of their support. They can be related to you or live in your home all year and make less than $3,900 in 2013, which generally doesn't include Social Security. It is interesting that the filing as head of household or married filing jointly are appropriate categories to use. However, married filing separately is not an allowable category. IRS is preventing enrollees from using this filing category. Anyone with this status may want to discuss this with their tax advisor. The third test is on MAGI. You recall this is the Modified Adjusted Gross Income Factor. As stated, MAGI is a methodology created under the Affordable Care Act to determine financial eligibility. It has two components, calculating income and determining who is in the household. On this next slide, we see that using the person's adjusted gross income amount shown on line 37 of their federal tax return, the following are included: wages, taxable interest, taxable pension, including Social Security benefits, business income, capital gains, other gains or loss, unemployment, dividends, alimony, rental real estate, royalties, tax refunds, and other income. Then the following can be deducted: self-employment expenses, student loan interest, tuition and fees, educator expenses, IRA deduction, moving expenses, alimony paid, and so forth. Now, MAGI introduces the following modifiers to add back certain income, such as non-taxable Social Security benefits, tax-exempt interest, foreign income, and housing expenses. Also, for Medi-Cal eligibility, a person is able to exclude scholarships, awards, and grants, American Indian or Alaskan Native income, lump sum amounts counted as income only in the month received. This fourth graph brings us all together to show various household numbers with various income levels qualifying for either Medi-Cal or Covered California with a subsidy. You can see that based upon the personal category and income, the following color bars of blue for Medi-Cal and of brown for Covered California premium subsidies vary based upon the classification of the individual. During this last enrollment, we found that oftentimes children were directed to Medi-Cal while their parents were able to enroll in various plan options with a subsidy. If you look at those two classifications of parents, adults, and children, and the bar color as it goes across the page based upon the percentage of the federal poverty level income, you can see how this is demonstrated. Younger family members earning an income and filing their own taxes should be enrolled separately unless they were still being claimed as a dependent on their parents' return. We had to correct enrollees' files that claimed their roommate as a dependent, others claiming they were members of a federally recognized Indian tribe when it was clear they were not. Others were trying to enroll even though they had not filed taxes for the last several years, in one case since 2007. It was a very interesting process.